Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. We've had some records for stocks, new highs for 2023. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Good morning to you both. Thank you for being here. Alan, we see a lot of these charts pushing up against the upper ends where people didn't necessarily expect us to be, right?
A lot of people positive. We've been doing this for more than a year, and as you well know, I'm very optimistic. And the name of my service is Bullseye Option, where I try to hone in on the bull side and hit that target. So today's a big day. We got to raise our iced tea. We got to 4,500 in the S&P, and Ben, my friend, we blasted through $100 on the dollar. So it's a big day, and this is a big momentum market that you don't want to miss.
All right. Cheers to your iced tea and everything that you just noted. That being said, let's talk about Micron today. So Micron's around $64. What are you thinking here?
Well, we did Micron a couple of months ago. Micron had been kind of dead in the water, and it had traded between 50 and 65 for a year. We saw a bullish divergence bottom. It rallied, went up to 75. Now, the way that I play is with these in-the-money options. So that gained more than 100%. That was 117%, I think, when it rallied. Now, it's giving us a second chance. It's pulled back, and it's coming back to that breakout. Now, this 62.5 point where we're very close to right now is kind of the midpoint of this year action, which is a pivot support. And it's also the 60 levels a 200-day moving average. So I'm looking at the October 57.5 call. It's trading about 9. It's $7 in the money. It's got 3 months of time. Now, when you look at Micron is up 8% in the last year versus the NDX, the Tech 100, up 30%. So I'm liking this second chance to make more money. You can't say momentum without MU.
Right, understood. So at this point, Ben, what do you think when you're taking a look at this chart? Feeling bullish at all?
Well, you can't say trend without END, and that's what I'm a little bit worried that Micron's seeing in terms of the most recent rally. Let's take a look, first and foremost, at how 62, 63 is going to be pivotal, and maybe even more so 56 for that bullish scenario to play out. Let's begin with a more granular look at price activity. We've got 5-minute candles here, so we're not going to get too diligent or too diving into this more granular time frame here, but you can see from 61 up to 64, pretty well-defined trend playing out here. Let's step away from the more granular, more tick-for-tick price activity. Let's step into an hourly time frame because this is where we start to see the longer-term trend playing out here. I mentioned how 62 could be a key area. It looks like we might be starting to balance here if we fail and roll over, but I'm giving the benefit of the doubt to the bears because the longer-term trend has been to the downside. Here you can see, first and foremost, a bit of a triple top that formed here right around this area here again, right around the 60, 71 area. It's pretty well defined. 3 areas where we stalled out, broke down, started to form what appears to be a balance, again, around this 62 area. I just want to point to what's going on longer term. Look at this. Speaking of double tops, actually triple top I just mentioned, but here's a pretty well-defined double top that formed. We're going back to the spring of and the fall of 2021. Breakdown, migration of value to the downside. Nicole, another triple top. What really concerns me here is the most recent test of the 75 area tested a key area balance, 73. It failed. We're rejecting that. I said again that 62, 63 area, 55, 56 is going to be important. This is where I got the 55 area, 56 area. If we do break down from there, we open up a door for a retest of the lows that we saw. My only concern here, intraday trend up, but tested a key area up around 72, 73, failed. Looks like we're starting to roll over.
Yeah, so hitting those triple top, you see that the efforts to go higher, but then pulling back. And Alan, there are people who are questioning if maybe some of these stocks are just too expensive at this moment.
Well, I don't think MU is an example of that. There may be some stocks that have run too far, too fast, and they are due for some profit taking, but I would just look at it as profit taking. I hear Ben, but I'm not listening to what he's saying because he had the same exact point when we had that double bottom at 50 and it bounced. It's about risk reward. And buying here at this midpoint level of this range is a good support risk reward play. And if we simply get back to 75 again, this option is going to gain nearly 100%. It's limited risk. It's got 3 months of time. It's lagged the market. And we've made money in Micron repeatedly.
Yeah. All right. Understood. Let's get to your next one, Matador Resources. Why did this one jump out at you?
Well, we've talked energy for a long time. Now, we haven't been right, but we haven't really been wrong because we've been buying some distant options in a lot of energy companies. Now, it looks like crude is finally getting the bottom base that we've needed when it comes to energy. Now, if you look at the energy complex itself, it's held rather strong if you look at XLE. Now, this is an individual stock that's got a PE of 5. It really can't. I mean, anything can get cheaper, but from a price to earnings standpoint, it's really hard pressed to get cheaper. I think the energy sector is the last bastion of risk reward here. Really, I mean, so many of these energy stocks have been left out. When that sentiment shifts, when that changes, and we see that happening with the bullish divergence, meaning it made new lows in May, but not new highs and implied volatility. That's a sentiment shift. And we've seen in June and July some leverage buying in this stock. So I think it's got some upside. I'm looking at the October 50 call trading for about $8, and it's $6 in the money, got 3 months of time. And I'm looking at this energy sector. Once the ball starts moving, and I think this dollar below 100 is part of the catalyst that's going to get it going, because we could see a huge rotation into these stocks. Let's remember how energy led the way 2 years ago and it's been left behind. And the PEs on these energy stocks is ridiculously low.
Yeah, nobody can say those are too expensive with a PE of 5. Let's get to Ben taking a look at this chart.
Nicole, I think this is probably the one stock Alan and I are going to agree on today. A very well-defined bull trend on multiple time frames, taking out key moving averages. Let's begin again with the more granular in this instance. We're going to start with a 5-minute time frame. Bottom left corner, we're going back to Friday. Most recent highs up around 56.20. It does look like we're starting to consolidate here, but I also went ahead and identified some of the areas of value that formed on the way up. We've got two of them, pretty well defined, right? Again, 51.50. You can see overlapping rotational. We get a breakout vertical type pattern, which transitions into that horizontal phase. Look at the well-defined vertical phase that we just recently kind of came out of. It does appear as if we're seeing something a little bit more overlapping rotational, but you can see the transition between the two here, and that's what I really look for. Stack up these areas of value. You can determine that we're seeing, again, a trend higher. The working assumptions that will continue until we take out something significant that was established on the way up. And, well, I mentioned here that we're on a trend higher environment here in multiple time frames. You can see in this instance, we're going back to 2020 where we bounced around 10. You can see, again, that staircase type pattern playing out, currently forming an area of value around this 55 level. This is a bigger picture time frame daily. This balance goes back to the beginning of 2022. We've seen an upper extreme around 75, a lower extreme again around that $40 level. But I do want to point out each instance here I was just talking about until we take out a key area that was established on the way up. Look at how each one of these tests, 25 got revisited, 32 got tested. We had 40 which got tested multiple times here, and each one of these held. So that's really solidifying that bull narrative. Speaking of solidifying the bull narrative, above the 50, above the 200-day moving average. You can see, again, taking out the levels that we saw back in the beginning of April, trying to reverse a bit of a more intermediate kind of a downtrend that we've seen since the beginning of the year. But yeah, looks to me like the bulls are in charge here in this instance, Nicole.
I see. Yeah, I mean, that was a great chart really showing us each time it's moving higher and holding. Alan, final thoughts there.
I'm really not going to say anything. I'm going to let Ben do the talking for once. So we can't stress enough the impact on the dollar breaking down. Now, is this a fake out breakdown or is this a real breakdown? But technically, it traded between 105 and 100 for more than 6 months. That targets 95 on the downside, and then we could be heading to 90. So the dollar decline could be a big, big boost that we can't understate.
All right, and then we look to TripAdvisor, which has been creeping higher, but took a leg down in its last earnings, had some heavy volume at that time, and was trading somewhat sideways. Where do you think it's headed?
Well, it's got the setup that I look for, that bullish divergence bottom. It made new lows in May, but not new highs and implied volatility. It also, we're seeing leverage buying here in July, June and July. So that's very positive. It's traded between 14 and 18 consolidated. I know Ben loves consolidation, and it's bounced and breaking out. If it breaks out above 18, then we're looking at 21 rather quickly. Now, this is a stock that's down more than 50%. There's a gap up at 25, makes it very, very attractive. So what I'm looking at is the December option. December has 5 months of time. The December 15 call gives you the right to essentially buy at the low, trade for about 4. And so, we're a couple of dollars, almost $3 in the money on this option. It's a good play. If we get to the 25 level, the option gains 100%.
Right. Okay. What are you thinking about TripAdvisor, Ben, when you look at this chart?
Well, I can see the bullish narrative here when I look at the more intermediate time frame, the more granular. But once I start to step back, you're going to see a longer-term trend that's well defined to the downside still. And what appears to be still yet to reject that working assumption, it appears to be a valid one. But let's begin with the 5-minute time frame in line with the look that we've had in terms of the other two names. We'll start with the granular, the well-defined trend up here. I've got the areas of consolidation. Alan, you're speaking my language. In this instance, I took out a fine-tooth comb. You can see that we really sort of broke it down here, but I really wanted to point out here how this plays out here on the more granular all the way up to the bigger pictures. That's what I like about this methodology. Bull trend, bear trend. You're talking stocks, bonds, ETFs, options across the board. It's applicable. Taking a look again, well-defined, bottom left corner to top right, currently balancing around 1770 as long as we hold above 1740. Working assumption is that we'll establish a new area of value at a higher level. Taking a look as we step away from the 5-minute time frame, I mentioned that longer-term trend. Here's the more intermediate look. From 2830 back in February of this year all the way down to 1439, and recently just more sideways than anything else. You can see the high conviction breakdown in reaction to earnings. You can see how we've been kind of balancing and just accepting this area. As long as we hold below 19, the bears don't have much to worry about here. This is just kind of a digestive type trade. Let's step away from the 4-hour candles because I want to show you, going back to this chart, the daily candle shows you March of 2021. So we're looking at the last few years of price activity, couple years of price activity with, again, areas of value that formed at lower and lower levels. Significance of 16 in this instance. Longer term talking 19, 21, whether you're looking at the 4-hour or the daily. But yeah, I mean, there's a well-defined trend of the day, trend on the 5-minute time frame, the more granular. But this longer term chart still telling me that the bears, again, in this instance, are in charge.
Yeah, when you went back to March of 21, I mean, that chart, that's a tough one when you look longer term. Not a pretty one at all. Alan Nuckman, thank you, Ben. Alan Nuckman, final thoughts here.
Well, I agree that the trend overall is down, but it's made a bottom base. It's done what I look for, and it's filled that first gap. So momentum is there. The second gap, if we can get above 18, the second gap, it should be attacked at 25. And the beauty is it gives you the right to be long from 15, which is within pennies of the all-time of that low. And it's got 5 months. So it could be a nice little Christmas present to go on a trip, being long from 15 with expiration for Christmas. That's something that I'm very, very comfortable with. And I'd like to see us unwrap that winner.
All right. Well, we'll have to keep having you on, and we'll continue to follow these. Alan Nuckman, it's great to see you and your pet in the back, which is very cute. Alan Nuckman, Chief Market Strategist at bullseyeoption.com, and Ben Lichtenstein for the Big Three today, where we had Micron, Matador, and TripAdvisor.